Welcome to the Property Mindset podcast, where I'm Emma Howitt, mentor, investor, and your guide to building wealth, freedom, and personal transformation through property. Property isn't just about bricks and mortar, it's about building the life that you truly desire. In this space, we don't just talk about strategy, we deep dive into mindset. And this really is something I found is often missing in other industries, but has been an absolute game changer for me in the professional property circles. What are we talking about this week? Okay, how to avoid the three biggest mistakes that new investors make. And in fact, it's not always new investors, is it? So we're going to deep dive into that. So as always, let's turn dreams into actions and actions into success. So of our three biggest mistakes that we need to avoid as property investors: use logic and data. Don't buy with emotion. I think especially when we're new to property investing, and especially if you've bought your own house, or even if you've rented properties, there is a vested interest, isn't there? You want to love that property. So you'll find people who will definitely pay more for their own house than they should an investment property, because there's more to it, isn't it? It might just be the aspect of it. It might be really close to a school. It might have that, I don't know, that amazing lawn that you've always wanted. It might have a pond at the bottom of the garden. I have no idea. It might have a certain look. It might be Victorian. It might be Georgian. It might have that front door that you've always dreamed of. When we buy or rent our own property, we are emotionally invested in that for our family. But when it comes to buying property for investments, I'm not saying that you can't like your property. Like, I love my properties, but it comes from a position of logic and data. And we have to really cut off this emotional element. Oh, I really love the front door. Well, that's not a good enough reason. You've got to absolutely lead with understanding the numbers, understanding the location, what the return on investment is. And I have worked with people before that say things like, oh, I had a look at the property and I've got a really good feeling about it. Right? That is not enough, guys. We have got to have absolute facts. You've got to know what's happening in the area. You've got to know, is the property sound? Has it, what are the next door neighbors' properties selling for? How much work does it need doing? Who owns it? What's their mortgage? So much information, because not every deal even is just a buy and sell. It's not necessarily, it may be better. So I've got a purchase lease option, and actually that situation was much better to do a purchase lease option than a purchase at that time. So we have to literally use as much knowledge as we can to drive those decisions. They absolutely cannot be emotionally driven states, because what we tend to do then is we tend to ignore the red flags. And those red flags are the things that we've got to work on. Properties are not cheap. We're not talking about going and buying a packet of sweets. We're talking about hundreds of thousands of pounds. We're also talking about potentially investor funds as well. So it's so important to set these clear investment criteria that you are going to stick to. And it just is focusing on those numbers, focusing on that location, and really looking at the ROI, that return on that investment. So how much is your money working for you? So for every pound, what are you getting back? And these are really key. And when you have that criteria, then stick to it. So some people, a return of 3 or 4% is fine. They're happy with that. But for other people, it's got to be 20%. So you can see that you're going to be looking at very different deals to get those different results. I've got a couple of quotes for you. I'm loving my quotes. So one is by Philip Fisher, and this is about knowledge as well. So the stock market is filled with individuals who know the price of everything, but the value of nothing. And then another one is numbers don't lie, but investors often lie to themselves. So don't be that person who lies to themselves. Use a deal calculator. It's really good to be able to create your own deal calculators so you can understand it. But if you really struggle with that, find somebody who's really strong at that. Find somebody else who's got a great deal calculator. There are so many fantastic deal calculators out there. And you remember to factor in all the costs, all the expenses. Is it a realistic budget? Can you speak to somebody at your networking event who's actually a builder who can come and view the property with you? And make sure when you've chosen your offer price, make sure that that's the maximum. So it might actually be better to go in a bit lower so that you've still got a bit of wiggle room to enable you to have some negotiation. And of course, remember, it's a numbers game. So if the price is not right, walk away and you will be amazed how many times the deal will come back to you. It happens time and time again. So always very politely say, I'd love to leave that on the that offer on the table. And if anything changes, I will be following up. And do give them a call every couple of weeks, just checking how that deal's going. And you'd be amazed how often they fall out of bed. So use logic and data, not emotion. Number 2, do your homework. Never scrimp on research. Now, I've even written a book about finding your goldmine area for serviced accommodation. I'll put a link in the show notes as well. But people tend to just jump into deals without having understood their area. And not every area is the same. Like we spoke about before, an area for one person might not be a great area for another person. So it is understanding what is the right area for you, for your strategy. Does your strategy fit in that area? It may be that serviced accommodation in the middle of the Outer Hebrides is not going to work. I don't know. Have you done your research on it? So look at the neighborhood. And a great one, I love going and seeing agents and saying, look, I'm looking for properties. And I talk about, I love investment areas. If you've got a scale of 1 to 10, 1 being, the absolute Bronx, is very dangerous to walk outside your door, and 10 being Hollywood Hills, I'm looking for kind of like the 5 to 7, 7.5. And I really love the 5 and 6 because those are usually the areas that are up and coming. They've been really dodgy areas and they're investing in those areas. So those will be the biggest equity growth. Agents are fantastic. Go and ask the estate agent. I literally explain that. Where are those areas? And they've usually got a huge map on the wall, haven't they? And they go and tell you. Again, looking at the property market history in that area, there are so many incredible things. You've got property filter, property data, property intel. You've just got so many places. Rightmove, Zoop will have a lot of these historical information on your area. Look at market trends. Keep up to date. Do you subscribe to, property magazines, YPN, Your Property Networking Magazine? There's lots of others as well. Look at tenant demand. What are the potential risks in your area? So, for instance, if you're investing in HMOs, if you've only got one major employee in that area and they go bust, you're a bit scuppered, aren't you? So you've got to make sure that you've got at least 3 big employees in the area so that so it might be, a hospital. They might have a big, manufacturing plant, and there may be a huge area of tourism. So that you've got one, the factory could shut down, but you've still got tenants looking for your property. So, of course, with this, due diligence is absolutely your best friend. People often Oh, honestly, that's why I wrote a book. They'll say, "Oh, I just think I'll give it a go." No, guys, there is no giving it a go. Whatever strategy you are doing, it requires some very specific due diligence on that area, research on that area. Okay. Do not go for, oh, this is too good to miss. And then afterwards, it's kind of like, "Oh." And always, understand what is going to be that exit strategy as well. So, so key. I've just popped that one in as an extra. So, Warren Buffett has said risk comes from not knowing what you're doing. Well, it's pretty obvious, isn't it? Risk comes from not knowing what you're doing. So, really, really, guys, make sure you're comparing comparables, sales, rental rates. There are so many places where you can get this data from. Walk the area, get down and dirty, literally pace those streets, look up into the air, what is above the shops, check your crime rates, all of these things. Any new developments coming or any developments that have been waiting for years and years and have just never happened. So make sure you overestimate any sort of costs and things like that and give yourself some buffers. And finally, point 3, don't do it alone. Don't go alone. Make sure you build a great, trusted team. You can make some massive mistakes by doing things on your own without knowing it. And I think the property sector is so friendly. People are so supportive. Even people who are investing in the same strategy in your area are so, you may have money and they may not. They may be halfway through a renovation and you're buying. People are so supportive. But equally, you've got to have your professional team. So your solicitors, is your estate agent somebody you can trust? What contractors are you going to get? Are there other experienced investors who might want to do the deal with you? So other people's expertise can really help you make those, avoid those rookie errors. And it enables you to make much smarter decisions. So, and of course, do your research and your due diligence on your solicitor, and don't just rely on the same old solicitor. Know that you've got a few, because sometimes, people leave and it may just be that one solicitor within the firm that was great. And actually the firm's not that good. So ensure that you have a backup. Your builder might be doing other jobs and can't fit you in. So you've got to have that team and get support from other people. I mean, yeah, absolutely go out there, network, and find out who other people are using as well. So, as they say, if you want to go fast, go alone. If you want to go far, go together. That's an African proverb, actually, one of my favorite. If you want to go fast, go alone. If you want to go far, go together. So make sure, again, you get recommendations. Make sure you ask your mentors, who they use, who they would recommend, learn from experienced investors and really look at the mistakes that they've made and see how you can build on that. So I've got a couple of book recommendations. The Millionaire Real Estate Investor by Gary Keller. It's a very practical guide on building wealth through property, especially around strategy and team building. And then the book on rental property investing by Brandon Turner. And this again is all about due diligence, financial analysis. So jump in there. I'll put the links in the show notes. These are Amazon affiliates. It enables me to invest back in this podcast. So last but not least, by Bill Gates, success is a lousy teacher. It seduces smart people into thinking they can't lose. Okay, so don't learn the hard way. Learn from other people's mistakes and learn how, through a clear head, thorough research, and a strong support team, you can make fantastic progress in your property journey. Property isn't just about what you do, it's about what you think. When you combine a strong strategy with an unstoppable mindset, there's no limit to what you can achieve. Please, please do reflect on today's episode and just consider one thing, one action that you can take away and implement this week to get you closer to your property goals. You might know somebody who's struggling in their property journey at the moment. Please do share this episode. It could be the absolute game changer that they need. And remember, the more people that we help, the greater our own wealth in every sense of the word. Growing this community means growing the potential that we all have to succeed together. And do remember, your mindset is your greatest property. Keep building it.